Hey there, welcome back to I'm Pretty Sure I Could Fix That. So today I'm looking to show you how to use sales receipts, what they are, how they're different from invoices, and when you should/shouldn't use them in your business. This might not be an applicable feature of QuickBooks Desktop for you, but it's good to understand the features that you are utilizing along with the ones that you are not to understand what you're foregoing or why it's not applicable to your business, right? Because the basic concept is if you pay for 100% of a software, typically you want to use 100% of a software. So when it's not applicable to you, we want to understand why in full detail. So to start, I would like to talk about what a sales receipt is versus what an invoice is. So in our normal business, when we're working with typically other businesses, we're using invoices. An invoice is something that typically indicates my customer is going to pay me at a later point, right? So that's things like net 30 terms. Typically, I have an accounts receivable associated with an invoice. That is always the use case here. A sales receipt is used when your customer is going to pay in full at the time of sale. It can be through either cash, a credit card, check, any form of immediate payment. So there's no accounts receivable actually created because there's nothing to collect later. The transaction itself is basically recorded right away. So the easiest way to think about when am I going to use a sales receipt versus creating an invoice is based on the service you're providing into what type of customer. So let's say you work at a beauty salon. Well, you're not going to invoice your customer 30 days from now, right? That just makes no sense. What happens is we get our hair done, and then I walk up to the cash register and I pay with my credit card. That's when a sales receipt's going to happen, right? I don't want an invoice. I'm not a customer that has net terms. I'm at a beauty salon. The opposite can be said for invoices. If I'm a manufacturing company and I am shipping parts to one of my customers, they have net 90 terms. Why would I make a sales receipt since there's an accounts receivable associated with it? So your sales receipt is a customer's paying me right now. An invoice is they're going to pay me later. Typically, though, even if you have terms for your customers where it's due upon shipment, um, but it is a typical business customer, you're still going to run it through your invoices, right? Because you're not going to break your invoicing process for random one offs, just like you won't do the same over here for creating a sales receipt. Typically, if you're using one, you're not using the other unless you have another arm of business that would dictate it. So when I say that, a good example is a lot of distribution places essentially, right, they'll do a lot of b2b or business to business sales where they're using these invoices, right? Everyone has terms, there's receivables, but they actually have a front counter too, so a regular consumer can walk in and buy something right at that point. That's when they're going to give me a sales receipt. But when that manufacturing customer calls for all those fasteners, they're going to use create an invoice. So it's basically dictated based off of the end user and how you are collecting your payment. So making a sales receipt is easier than even making an invoice. All you do is you're going to go to your home screen and select create sales receipt. You will then pick your customer slash job. I'm going to use Wayne Enterprises just as an example. Um, but let's say you are working in retail or something along those lines, or you are a beauty salon. You might just have a general cash customer. Um, if you do want to track your customers, maybe you are a beauty salon who you do want to keep track of, the amount of times, I come back to get my hair dyed blonde. You might assign, write my name so that I have an account associated with it. But if you're having a bunch of consumers constantly running through, you might use a general cash customer so that you don't need to keep track, right? It's not a value add for you. That really depends on what's useful for your business. So then, just like your invoicing process, you're going to select your item. We're going to sell a black oxide service to a consumer immediately. Don't know why. Um, they are choosing to get their stuff black oxidized. I'm making them pay immediately based off of basically my business use case. I'm selling them three, and I'm gonna go awesome. All right. and they're going to pay me via check. So then what's going to happen is I'm going to hit save and close. So now let's look in a few places. We have actually received the payment. Everything has gone through. If we go to record deposits, if you look right here, here is my $300 from my cash customer. And what it ties to is my receipt number. So typically, if you were to use an invoice, you'd be using the receive payments. You're not going to be able to find it here because the receive payments is for your accounts receivable process. So it's not going to run through here. It is going to be booking straight to your record deposits. And whenever you do decide to deposit it into your bank account, right, we'll select it. I'm going to say I deposited it. Let's pretend on Monday I'm going to deposit. Um, but now it's going to run through just like anything else, and I'll hit save and close. But when I want to go back and I want to see something about that sales receipt, I am going to find it by that sale number. So that's right here. This is my receipt number. If I want any information on the transaction, I can go to my transactions, take my related transactions. Here's me getting the 300, and then there is my related deposit. So I hope this was helpful. As always, my video editing is a lot to love. This is kind of a function in QuickBooks that, if you're doing a lot of business to business, this isn't useful for you. There's a reason why you have not encountered this button. But it is something that can be useful if you're looking to diversify the customer base that you are serving, right? If you do want to start doing some direct to consumer things, typically you're not giving them terms, right? You're going to have them pay immediately upon receipt. The other places where this can be useful is if you need to, if say you're selling through an Amazon or something and you need to get your transactions through in QuickBooks and you don't want to muddy your invoices, well, do it through your sales receipts, right? Because Amazon or those online sales points are done immediately. It will create a reconciliation on the side, but that's not related here. It's just the different use cases you can use for stuff like this. But yeah, if you have any questions or if anything was unclear, please feel free to comment below. If there's anything you want to know how to use in QuickBooks, please ask. I'd love to just be helpful. I want to see businesses succeed in whatever way that looks like and utilize a software that I think can be powerful if we understand how it works and how to be creative with it. But all right, have a good one, guys. Bye.